So, let's see. First off, a lot of people are asking me, you know, why I trade the way that I trade and how come I don't do certain things and, why am I aggressive and, the losses that I take and why don't I buy closer to the price of the stock. And there's a lot of questions. So I guess I'll go ahead and answer them. First things first is this is a $600 experiment, right? Like when I deposited $600 in there. That should be, I don't know what it is, year to date deposits, right? So that's all I'm putting in there. I'm not continuing to do like people would do with a 401k or other investment stuff where they continue to put 500 a month and this, that, and the other. You do that at the end of the year, you end up with $6,000 in principal, and you can continue to trade and speed up your profit that way. However, I'm showing people what you can do with $600, and take a little time, a little patience, and aggressiveness, and see where we go from there. The other thing is, it's $600, so if you lose $600, you are able to recap that quicker than if you lose, let's say, 25,000. Right? The strategies probably will be different as I get a little bit higher. Maybe, maybe not. We'll see how it goes. Last but not least, there are going to be losing trades. I mean, this ain't some Wall Street movie where you can see people just winning with their Ferrari and all that other stuff every single day. There's going to be losing trades, right? So yeah, I play it aggressive because I'm turning $600 into whatever it may be. So now that I've said that, let's go over the last week. I'll tell you about this damn Amazon position that I had bought and sold for $67 and it ended up being worth $900. By the time I got out of it the day before Amazon made its wonderful 200-point jump. So if you look at it, I've sold it on, what is that, July 8th. This is one of them things that I'm kicking myself in the butt about. Trying to call myself playing it a little safe because the market dropped so much last week that I just wanted to start taking some profits. July 8th, I think that's there. I sold it. The market opened at $3,022 and closed at $3,081. The strike price for that position was, so started at $3,022, $3,190. So $3,022. That's 170 points out the money with I think 2 days left, and it was just bouncing around. So I sell it for $67. 2 days later, it's worth $900. So I missed out on about $1,700. So that's a loss in my book from not having it. But you have to. These are the things that are going to happen. All right. So as we stand right now, $1,500, $4,000 net liquidity. These are the positions I have over the last week. I once again have been taking some money off the table. I bought into Facebook at 30 cents. Right now they're worth 37 cents. So we have another 2 weeks left on that for it to reach the strike price. What we're looking at closing this week are, I believe it's Google, Celsius, and I think that's it. I took a loss on the Russell. Got out of that one. So those are the ones that closing this week. I think I got a little time on. Yeah, Facebook, and MGM is next year. So yeah, these are what I'm looking at. 1540. So I'm in the money on Google right now. That's $1,000 spread. So if it reaches over 1450 by the end of the week, we can cash out $2,000. I believe I already sold some Google for a profit. So let me see. Maybe not. Nope, I just bought it for 165. So I haven't sold any Google for a profit. So it's possible that I may sell one if it gets above 500 or 600 and then take the other one to expiration. Celsius, I already sold one of those for a profit. I bought those for 33 cents. They're at 92 cents. Sold one for 90 cents. So that covers the other two Celsius. So I'm going to let that go to expiration and see where we end up. Long as it's over 12.83, I'll be profitable. So that's what I'm looking at right now for the week coming up. The other thing I tell people, you got to look at not the amount of net liquidity, but the multiple, right? Like the percentage that you've made. So in this case, I've gone, if we just talking available dollars, right? Like if all my options, knock on wood somebody, go to zero right now, I still have $1,500, which is what, 2.5 times of what 250% profit, right? So I flipped my money twice and a half, and that's where we're looking at. Or 200%, 250%. That's a good percentage for 3 months, 4 months. You know, if you keep that up, we're looking at 1,000%. So 10 times by the end of the year. You tell me, if you go to a bank and say, hey, I'll give you $100 at the end of the year, you give me 1,000 back, they're gonna laugh at you. Go try it. Say I give you 600. End of the year, you give me 6,000 back. They're gonna laugh. They're gonna say, well, sure. If you put up $5,900, maybe we can get 100 back by the end of the year. So you got to think about these things and what you're actually doing, right? So if you start off with more money, then of course you'd be at a higher thing if you've done exactly what I did same time I did it. But yeah, that's where we're at. $600 into 4,000 right now. We'll see how it looks next week or by the end of the week. I may try to get into another position or two. I'm trying to keep my available balance and net liquidity in a good range. So as I cash out, I put more in. Yeah, and that's where we're at. All right.